Hello, everyone. Good morning to you all. And I'm so grateful to be here with you today and trust you are doing well and getting ready for the New York session today. So let's confirm that we're on the same page. So if you can see my screen and you can hear my voice, kindly type in hi in the comment section so that I can confirm that we're on the same page. So I would like to see some feedbacks in the comment section, please. Is the audio quality good? Is the visuals fine? Let me know so that we can kickstart the session. So I'm trying to load up my comment section. Give me a moment, please. Okay, here we go. All right. Haki88, good morning to you. I accept your roses. Thank you very, very much for that one. Hey, Carrie, how are you doing this morning? Glad to have you here this morning. Trust you are doing well over there. Okay, I can see 964. Good morning to you. Luca Panzaru, how are you doing this morning? Ike88, I see you again. Okay, thank you very much, Luke Sika Panzaru. All right, thank you very much. Thank you. All right, with this handful of feedbacks, I want to assume that we are all on the same page here. And it's on this note, I welcome you all to yet another promising session on the Extreme Speed Live, where we shall be doing a price action based technical analysis. And in this session, we are going to be diving into the handful of financial instruments that we have chosen at the beginning of the week. That was yesterday. And these are the USOILSPOT, USTech100, and then we also treated the USD JPY and ended the day with the XAUUSD. So we are going to be looking at this and using trend lines and chart patterns to make informed trading decision based on historical price movements ahead of the New York session today. And my name is Sharif Daramola, and I'm going to be your host for the next 1 hour. And it was quite an interesting start to the week, as against all odds, we were able to scoop a significant amount of profit on most of the instruments we are monitoring. So we are going to be looking at that in a moment, and also look at how we are going to be managing our existing positions and look out for more opportunities as we head into the New York session. So you know how we do it. The first thing we are going to be doing is to check the economic calendar to see what majority in the market are looking forward to. And you know what we focus on? We focus on high impact events, which will be affecting the instruments the currencies that is part of the instrument we are monitoring. That is the pound sterling, the US dollar, and the Japanese yen. And for today, Tuesday, June 13th, we have about 2, 3, 4, 5 high impact events to look out for. And from the UK economic docket, we already saw the claim account change, which happened about 4 hours ago, 4-5 hours ago, and it came very positive for the pound sterling, as we saw. It came negative as we saw a minus 0.20 deviation. Then we also had a higher low unemployment rate, which also came below expectation too as well. And we are going to be looking at how the pound sterling has reacted to this event and how we want to position ourselves ahead of the New York session. Then we also having the consumer price index, which is coming up in about an hour from now. And this index is normally released by the U.S. Department of Labor Statistics, and it is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. And generally speaking, a high reading is seen as positive for the US dollar, while a low reading is seen as negative. And from the data we have here, we have a 0.4% from the previous data, and there is a consensus projection of 0.4% again. So majority are thinking that there is not really any change into what to look out for today. So we are going to be looking forward to what the actual data is going to be. Will it be below expectation, or just as expected, or even beyond expectation? And of course, we are going to be looking at the charts today to see if we are going to be able to identify a pattern which will reflect the anticipation of the major key players in the market ahead of this event, to look out for trading opportunities. Then in about 6 hours, in about 3 hours from now, we have something coming in from the United Kingdom's economic docket, and that is the speech from the governor of the Bank of England. Is going to be having a speech, so we want to look forward to what he's going to say, and this will also give us an insight into the economic situation of the UK economy. So these are the high impact events that we are going to be looking forward to today. And one thing I would like to state here, that the key economic event for today is the consumer price index, which has a lot to tell on what the interest rate decision will be tomorrow, as the Fed will be looking forward to what this data will be to give an insight whether we are going to be having a rate hike or not. So with the information we have gathered here, we are going to be diving right into the charts, looking at things from a technical standpoint to identify a potential trading opportunity ahead of the New York session. So as usual, the first instrument we are going to be taking today is the US All Spot. And in the last 24 hours, we have been quite profitable on this commodity, as we sold the US All Spot right below the $68.63 level. So let's run through how the week started for us on the US All Spot, what we saw, and what incited the idea of thinking of selling this commodity. So at the beginning of the week, we acknowledged the fact that price action was a little bit indecisive, where we saw it ranging between the $70.10 level and the $69.30 area, to give us an insight into the level of indecision at that point. And with the breakdown of that support line at the $69.30 level prior to our live session yesterday, we had an insight into the potential that sellers might likely be dictating the pace for the week. Though we missed out on this bearish momentum, but during the live session yesterday, we were around here during the live session yesterday, and I told us all that we are going to remain patient, waiting for new structures to mature to give us an opportunity to join this bearish momentum to the downside. And one of the ways we were looking out for opportunities was to use this trend line. Remember, we identified this trend line after connecting the series of lower highs since last week Friday. So we had that trend line figured out, and one thing we said here is that we want to see price action come back to retest this trend line with selling pressure around that area to give us an opportunity to sell. So we saw the situation here yesterday, and we saw our price action came back to retest the trend line. And remember, we had a level identified at the $68.63 level yesterday, where we said we are going to be having a sell stop order below this level for us to be part of a bearish move to the downside. Let me show you what we saw on the 50 minutes time frame for those who missed out on that on our live session yesterday. Okay, so this is what we saw on the 50 minutes time frame, and it was at this point. Okay, this was where we were during the live session. So I said here that we want to see price action break down both this trend line and the $68.38 level to be part of a bearish move to the downside. And with a sell stop order sitting below the $68.63 area, we had our first sell position for the week triggered, and we saw our price action move significantly well into our TP target around the $67 area, dovetailing to about 170 pips in profit. We also had the privilege of adding more position. If you remember, we also had this key level sitting at the $67.70 level, somewhere around here. We said we are going to be adding more position if price action breaks down and retest that structure. And look at what we saw here. We saw the retest of the structure. Price action went all the way to the downside, giving us more opportunities to add more position. So it was quite a profitable week for us, profitable day for us on the US All Spot. And for those who took advantage of these opportunities, well done to you for being on standby to catch this move. So right now you will not be in any position unless you are taking advantage of this new opportunity I was able to spot this morning. So with that being said, let's go into the details of how we are going to be taking advantage of any potential trading opportunity today. So what I saw here this morning while trying to decipher what could really happen today from this current market structure, the first thing I was able to observe here is that as soon as price action got into the $67 area, we begin to see some buy pressure resume around that area. So every attempt by the sellers to break through this structure was met with strong resistance from the buyers. As you can see here, we saw here during the New York session yesterday, we saw the sharp rejection by buyers. Again, the second time sellers tried to push through the structure again during the later part of the New York session, and it was also met with strong resistance from the buyers too as well, giving us a sign that buyers are actually strong around that area. And with the way price action was transitioning, we appear to have something that's looking like a double bottom structure. And to add to that was the fact that price action has been finding higher lows throughout the early hours of today. And to buttress that, we had a bullish trend line, which at this point is a confirmed bullish trend line. So we had a bullish trend line here to connect a series of higher lows to emphasize the strength of the buyers. We can see buyers are gradually building momentum at that point. So what I did here was to use the $67.80 level. I shared this on my public platform this morning, that we are going to be looking out for buying opportunities if price action breaks out or retest that level. And as you can see here, price action indeed broke out retest of the $67.80 level to trigger a buy position at this point. And if you are lucky enough to be part of this move, well done to you for being on standby to catch this move, as you will currently be running with about 74 pips in profit at this point. So if you have a buy position running at this point, I would advise you to move your stop losses right now to secure this current buy position. And the most appropriate area to secure this current buy position is anywhere sitting below the $68.20 area and the $67.50 level to secure this current position. So well done to everyone who actually took advantage of this opportunity. Now, for those who had missed out on this one, what is going to be our plans for today? How do we intend to take advantage of any trading opportunity? Hold on a second, please. Give me a moment. Give me a moment, please. All right, so like I was saying earlier, sorry for the break in transmission. I had to sort out some issues here. So like I was saying earlier, at this point in time, you want to move your stop loss to secure this current buy position. If you have a buy position running right now, and for those who had missed out on this opportunity, how do we intend to join a potential move if buyers will still continue to dictate the pace, or probably we get ready to sell? So right now we can see our price action is gradually approaching a level that we identified yesterday which also has been a major determinant of price action in the last 24 hours. As you can see here, how that area was broken to the downside to trigger that sell stop order we had yesterday. And from a technical standpoint, when price action breaks down a key level like this, we expect that one point in time price is likely going to come back, retest that structure to incite another bearish move to the downside. And with the fact that price action is approaching that area, you would agree with me that at this point it is very reasonable that we remain patient and wait to see how price action will be reacting to the zone. So depending on whatever happens around here will determine if we are going to be buying or selling the US oil spot for today. So if we are looking forward to buying the US oil spot at this juncture, then we want to see price action take out the $68.63 level, break out that structure to the upside, then wait for a retest of structure to happen, giving us buy pressure above that level to be part of a trend continuation to the upside. But if it so happens that instead of breaking out of that zone, we see price action come into this area and we begin to see the appearance of selling pressure, that is, buyers find it difficult to break through the $68.63 level, then at this point we want to be considering selling the US oil spot. And if we identify a reversal pattern, let's say a double top structure or a head and shoulder pattern around this area, you know how we do it. The next thing we want to be doing is to identify a neckline which we are going to be using to guide that move to the downside. So let's be on standby if selling pressures persist below the 68 or around the $68.63 level. But if price breaks out of that structure, we want to be adding more position to our existing trade. Now, as things are right now, and for the fact that we had a breakout, a significant breakout of the structure a couple of hours ago, there is still a chance that price goes to come back to retest that structure. So we want to keep that in mind too as well. So there is a situation where price goes to drop. If price drops into this area, you can see how the $67.80 level also shares a confluence with this bullish trend line that we identified earlier. So if price action comes into that $67.80 level and we begin to see some buy pressure resume above this area, then we have no other choice than to get ready for another wave of bullish momentum. But if price breaches this trend line to the downside, then at this point it will be a clear sign that this trend line may no longer have the capacity to negate this selling attempt in this market, where a breakdown retest will definitely welcome a selling opportunity in this market. So let's be on standby to catch all these opportunities, if any of these opportunities, if they happen. So you want to mark these levels out on your chart so that you can use it as a reference point when you're about to make your independent decision. So we want to mark out the $68.63 level, where I told us here that we want to see how price action will be reacting to the zone to determine if we are going to be adding more buy position or getting ready to sell. And I told us all here that when price action comes into this area, we want to see how it will react to the zone to determine if we are going to be buying from the zone or selling if it breaks through the area retest of that structure to the downside. So let's keep this in mind. Mark this out on your chart, or you can as well screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. If you have any questions regarding what I just discussed here, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So with that being said, I will be moving on to the next instrument while I continue to check the comment section to see if there are any questions for me. Okay. So moving on to the next option. The next option we are going to be treating this morning is the USTech100. So let's go into our 1 hour time frame. The USTech100 I will consider the USTech 100 one of our most profitable trade in the last 24 hours here, as we had this significant move to the upside. So what was the idea behind buying the USTech 100 yesterday? What did we see on this chart that made us to buy the USTech 100? So the first thing we saw on this chart, let me go to as far back as Thursday last week's trading session. We were able to spot a bullish trend line, which we said we are going to be using to guide our trading activity for this week. Remember? So we said as long as price action remains above that bullish trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to add and maximize the bullish momentum. Then, in addition to the bullish trend line here, was the fact that we acknowledged that price action was caught within a range between the 14,595 level and the 14,545 zone. And with this situation here, you know how we do it. Whenever we have a simple flat channel like this, all we want to be waiting for is either a breakout of the resistant line of the channel to give us a buy opportunity, or the breakdown of the support line of the channel to give us an opportunity to sell. And with the situation we had here, and with our buy stop order sitting above the resistant line at the 14,595 level, we had our buy position triggered. And if you had missed out on that opportunity, the market came back to do multiple retests of that structure to give us a whole lot of time to be part of that bullish move. And as you can see here, price action continued to climb to the upside. And remember, during our live session yesterday, we also acknowledged the $14,670 area, where we said we are going to be having another buy stop order to maximize the potential of this bullish move. And with the buy stop order above that level, we had another buy position running. So we had two positions running on the USTech 100 in the last 24 hours. So the first position moved about 280 pips in our favor before this old choppy situation began, and the second position moved over 200 pips in our favor before this old situation we are seeing right now. And for those who still have a buy position running at this point, that is, if you had not yet taken your profit and you still have a buy position running, then I will say here that it is high time that you secured your current buy position by moving your stop losses accordingly. And from this new structure we have here, it is most appropriate that you have your stop losses sitting somewhere around the 14,800 area, so that we can give room for price action to breed. So with our position well secured at this point, what is going to be our plans for today? Are we still going to be buying the USTech 100 today, or are we going to be seeing a situation where price will be dropping to the downside? And if we consider the macroeconomic event we are looking forward to, that is the CPI data, is going to be having a major influence in this market, and definitely we want to position ourselves. We want to identify structures that we are going to be using to position ourselves ahead of this event. So the first thing I would like to do here is to go into the higher time frame before we go into the details. Let's look at the 4 hours time frame first of all, and look at what we are looking out for. We are looking out for at the beginning of the week. So on the 4 hours time frame, remember, we acknowledge the fact that price action has been bullish, and we took into consideration the activity of price action since the beginning of the month of May. We had the bullish trend line emphasizing the strength of the buyers in this market. Then things got a little bit more interesting during the last week of last month. And what we saw here at the beginning of the week was a channel where price action was ranging between the 14,670 and the 14,250 level. And one thing we acknowledged here yesterday is that if price action breaks out of the resistant line, it will be a very it will be an opportunity to add more position to our existing trade. And with the situation we have here, breakout of the 14,670, and if we look at this from a technical standpoint, we expect that whenever price action breaks a significant level just like this one here, there is a high chance that price action could still come back to retest that level in anticipation of another wave of bullish momentum. So is it possible that we are going to be seeing a retracement phase in this market that will bring price to retest the structure, which would be a reflection of profit taking activities, as those who bought at the cheap price here will want to be doing some profit taking, which would reflect on the chart as a retracement phase. So we shall be scaling down into the lower time frame to find out this before we make a decision. So scaling down into the 1 hour time frame, we are going to be extending this bullish trend line into the future, as it's still going to be one of the parameters that we are going to be using to guide trading activity today. Then another thing I would like to acknowledge here is the fact that as soon as price action got into that zone here, where should we call this one? I think the 14,880 or 885, I think. Let's label it 14,855, 885 level. So you want to mark this level out on your chart. So as soon as price action got into that 14,885 level, as you can see here, we begin to see some selling pressure around that area, giving us signs that sellers are around that area. So then the next question that we'll be asking here is that will this turn out to be a retracement, probably bringing price back into the trend line, or the 14,670 to incite a trend continuation to the upside? So to capture this situation here, we are going to be acknowledging a key level that will help us confirm if price action will be going through a retracement anytime soon. So I will be giving this a blue color to differentiate it from the previous structure. So we have this marked out at the 14,830 level. So let's label this area on our chart 14,830 level. So we have this blue line. Let's give it a blue color. So we have a structure to work with ahead of the New York session today. So what I'm looking at this point is to wait and see how price action will be reacting to the 14,830 level. So if we do have a breakdown of the 14,830 during the New York session today, retest of structure, then there is a high chance that price action will go through a retracement phase. Now, in this kind of situation here, this is going to be a counter trend opportunity. And so for those who are not counter trend traders, or if you're not a scalper or a short-term trader, you might want to stay clear of this trade and wait to see how price action will be reacting to either the trend line or the 14,670, where it now depends on how it reacts to this level that will determine if we are going to be buying. That is, if buy pressure resumes above either the trend line or the 14,670, then we buy to the upside. But if we have a breakdown, then we are going to be getting ready to sell. And that will dovetail to, let's say, minimum of about, let's say, how many pips could that give us? A 90 pips minimum, or a maximum of about 160 pips if you are taking that counter trend opportunity. So like I said here, if you are not a counter trend trader, you are not a scalper, please stay clear out of this one and just wait for price action to come into the trend line to make a decision. And the reason why I have said this is simply because the fact here is that the price action has been bullish, and taking a counter trend opportunity requires a whole new level of attention. So you want to be on your chart to be able to move your stop losses accordingly to secure your current position as price action moves in that direction. So with this being said here, so we are looking forward to see if price will break down the 14,830, and if it breaks down, retest of this level happens, then we are going to be looking forward to a retracement move. However, if price action does not break down the structure and instead it continues to find buy pressure above this level, then there is a high chance that price could break out of the $14,885 level to incite another wave of bullish momentum. So in this kind of situation here, considering the fact that price action has been bullish since the beginning of the week, and for those who already have a buy position, who have already been profitable here, you want to be having a buy stop order above the 14,85885. Anywhere above that area seems most appropriate to look out for buying opportunity in this market. So let's see how price action plays out in the zone. So our center of focus for today, prior to the New York session, is within the 14,885 and the 14,830 as we continue to monitor price action. So it depends on how price action reacts to either the resistance line or the support line that will give us an idea into buying or selling this option from this juncture. So that is my view here on the USTech100. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I'm willing to be of help. So I'm going to be moving on to the next instrument. So I want to take this, hold on a second, I want to check what the next instrument is. Hold on a second. I want to see the sequence at which we attended to this instrument yesterday so that I can follow through. Okay, so after the USTech100, we treated the XAUUSD. So let's move on to the XAUUSD right now. So on the XAUUSD, this was the structure we identified during our live session yesterday. And where were we during the live session? Okay, we were around here during the live session yesterday. We were around here, just right above the resistance line of that flat channel we identified at the beginning of the week. So let's run through this. So at the beginning of the week, we saw our price action started on a bearish note, just right below the $1,961.20 level, giving us a flat channel to work with at the beginning of the week. And one thing, you know how we do it here whenever we have this kind of flat channel, we want to wait for either a breakout of the channel to happen or a breakdown of the channel to give us an opportunity to sell. And remember, we already cited the breakout of the structure during our live session yesterday, and I told us that for those who took advantage of this buy position, that you want to be moving your stop losses to secure that position as anything could still happen. And I told you how important that zone is between the 1,965 and the 1,960 on the 4 hours time frame. So for those who are not part of the live session yesterday, don't worry. We are still going to treat that in a moment so that we can all be on the same page. So I told us all to move all stop losses. And in addition to that one, I told us here that we are going to be using this trend line as our yardstick to guide trading activity for yesterday's trading session. And what this simply means is that if price action remains above that trend line, we are going to feel comfortable in our buy position, while we also look out for more opportunities to buy the XAUUSD. However, we also agreed here that if price action breaks down the 1,960, which would have also broken down the trend line, then we are going to be getting ready to sell. And with our sell stop order below that structure, we had our sell stop triggered as we saw price action move over 100 pips in our favor before this bullish momentum began. And if you had moved your stop loss according, just like we always do, whenever price action moves significantly well in our favor, you must have been taken out with some modest size of profit. And so well done to you for being on standby to catch that one. And one thing we also stated here yesterday is that if at any point in time price action breaks back above our 1,960, we are going to be looking out for buying opportunity. And if you are taking advantage of the breakout retest of the 1,960 this morning, well done to you for being on standby to catch that one, as you will currently be running with about 50 pips in profit. So for those who took advantage of this buy position, you want to be moving your stop losses right now to secure this current buy position at this point. And the reason why that is simply because of how important that zone is between the 1,960 and the 1,965. So after securing this position, let's scale up into the 4 hours time frame, where I want to share with you what we saw at the beginning of the week and why we have said that zone between the 1,960 and the 1,965 should be considered a critical area in this market. So scaling up into the 4 hours time frame, this was what we saw here at the beginning of the week. So the first thing we saw on this chart was the fact that price action was bearish, and in fact we had a couple of trend lines to emphasize that. So we had this trend line figured out yesterday. That was the major trend line. Then we had this second trend line here, which price action was respecting till the end of last week's trading session. And we also had the third one, which was broken a couple of times during the course of last week's trading session. Now there's one interesting thing about this whole structure that we have here on the 4 hours time frame. So despite the fact that we are seeing lower highs in this market, the first thought is that price action is bearish. But if you take a closer look at this current market structure, you will realize that though we have been seeing a lower high, but we are yet to find lower lows in this market, as you can see how the $1,940 level had been a major buying niche in this market. So you can see how sellers tried to break through this structure, and every attempt had failed, as we saw how buyers negated all the attempts coming in from the sellers at every point in time. So you can see it was such a strong demand zone that sellers found it difficult to break through. So we are yet to find a lower low in this market to confirm that sellers are strong here, and it is quite reasonable that as long as price action sits above the strong demand zone here, buying the XAUUSD seems to be the best option at the structure. Now if we zoom in to look at things closely, this is where the importance of the 1,960 and the 1,965 comes into play. Now look at what has been happening here since the second week of this month. The second week of the month of May, that was last month. You will see how between the 1,965 and the 1,960 had played a major role in determining how price action is moving. Now look at what happened here. So how this area was a demand zone, that's between the 1,960 and the 1,965. It was a demand zone mid-month of May. So what happened here, it was also a demand zone here before the breakdown retest happened again within that zone, and we saw a consolidation phase around this area a couple of weeks ago, stroke the early days of this month. We saw the breakdown, significant breakdown at the beginning of this month here. We saw how price action came back to retest the structure again around that zone. And throughout the course of last week's trading session, we saw how that same area was serving as a very strong selling niche in this market. So you can see how that zone between the 1,960 and the 1,965 has played a major role in determining the direction of price action in the last couple of weeks. So it is quite reasonable that as long as price action remains within this area, we need to be very, very careful. Now, one thing about this whole structure which is making things look for me bullish at this point is because of this demand zone here, and for the fact that since the beginning of this week we have been seeing buy pressure around this area here. So in as much as this area has been a selling niche, we can see how buyers have been negating the attempt by the sellers to push price further to the downside. So at this point I am having a buy stop order sitting above the 1,965 to capture any buy position at this point. And if price action goes on to break out of the $1,967.50 level, I want to be adding more position to my existing trade. However, in as much as we're looking out for buying opportunity, like I always say here, we don't want to ignore the potentials of sellers too as well. So selling the XAUUSD at this point, I would want to see a takeout of the lowest point this week, which falls around the 1,952 level, to join any bearish move to the downside. And one thing about selling at this juncture in the market is that we want to be on standby to be ready to move our stop losses to secure the sell position. Remember, I told you we are sitting on a very strong demand zone and bullish attempts could come in at any point in time. So breakdown retest will welcome selling opportunities, and we'll continue to monitor price action and wait to see if price action moves well. We move our stop loss, secure the position. And the only time I will feel comfortable in a sell position in this market is when price action takes out the buy positions within that 1,940 level. A breakdown retest of this zone will give me much more confidence to add more sell position to my existing trade. So with the idea we have gathered here on the 4 hours time frame, I want us to scale back down into the 1 hour time frame, where I want us to be using the structure that we identified at the beginning of the week as a yardstick to guide our trading activity today. So like we said here, I told you I'm having a buy stop order above the 1,965, which will be triggered at any point in time. So let's see how it will play out. If breakout happens of that level, then I want to be adding more position, have the breakout again of the $1,967.50 level. So let's look out for buying opportunities above that area. Now, in as much as we continue to look out for buying opportunity here, I also want to call our attention to a key level here, which we also want to be taking into consideration, and that is this bullish trend line we identified yesterday. Now, you will see one thing that happened here yesterday along this trend line. We saw the significant breakdown of this trend line with an engulfing bearish candle, which is a good sign that sellers are strong in the market actually. But one thing here is that whenever price action breaks down a key structure, there is a likelihood that price action could come back, retest the trend line to incite a trend continuation to the downside. So because of this perspective, this technical perspective in mind, we want to be very careful. So if bullish momentum happens, we move our stop losses above the $1,967.50 level to secure the buy position. But if selling pressure resumes around this area and price action drops to the downside, then we would have no other choice than to anticipate a bearish momentum. So in that regard, if having a sell stop order below the $1,961.20 level seems most reasonable to join a bearish momentum, while we wait out for a further breakdown of the 1,940, which I showed you on the 4 hours time frame, to add more sell position to our existing trade. So we have a simple setup here on the XAUUSD to maximize the potential of any trading opportunity here. So like I said, above the 1,965 and the $1,967.50 level is an area we're looking out for buying opportunity. And if price action drops back below the 1,960, we are going to be looking out for selling opportunities in this market. So we want to be on standby to catch any of these opportunities. If you have any questions whatsoever, feel free to let me know in the comment section. So these are my views here on the XAUUSD for today. So I will be moving on to the next pair, which is going to be the last instrument for today, and that is, which one is that again? I think okay, the GBPUSD. So let's go into the GBPUSD chart, and what did we see on this chart yesterday, and how do we intend to trade this today? So here we are on the GBPUSD chart, and during the early hours of during the trading hours, during our live session yesterday, the first thing we acknowledged here was our key level. Don't worry if you don't know how we got to this point. I will show you in a moment when we scale up into the 4 hours time frame. So remain patient. I will be sharing with you how we got to this point. So here we are. So we had this key level identified at the 1.25900 level, and this was the basis for this was the structure that we're supposed to be using to guide our trading activity. And you know how we use our key levels in this community. If price action remains below our key level, we want to be looking out for patterns that will support a bearish momentum. And if price action breaks out of our key level, we want to be looking out for patterns and structures that will be supporting buying opportunities. And if you look at the structure here on the GBPUSD, you will realize that price action has been trading most of the time below that key level to emphasize the strength of the sellers at this juncture in the market. And in addition to the key level we identified here yesterday, we also identified a flat channel where price action was initially ranging in between, that is the 1.25850 level and the 1.25650 area. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for structures to mature, giving us a signal either in the form of a breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunities. And during our live session yesterday, we were actually above this key level, and I told those who took advantage of this buy position that they should all move their stop losses to entry point. And I also made mention here that we are going to be using this trend line to guide our trading activity, that if price remains above the trend line, we feel comfortable in our buy position, and if price action breaks down the trend line, we are going to be looking out for selling opportunities. And what we saw here prior to the New York session yesterday was the breakdown of that trend line. And to help us spot an opportunity to join a bearish move yesterday, we scaled down into the 50 minutes time frame, where we identified a simple setup that we said we were going to be using to guide that bearish momentum to the downside. And this was what we were able to come up with yesterday. We came up with the 1.25800 level, as you can see here, the pink line on your screen, and we said the breakdown retest of this level will have also broken down and retested this trend line to trigger our sell stop order for a sell position. And as you can see, we saw how price action broke down, retest that area below the 1.25800 area to trigger our sell position for the week. And we were fortunate to be part of the bearish move to the downside, as we saw the first sell position move over 90 pips in our favor. And remember, we also identified the 1.25650, which happens to be the support line for the week. And if you look at that one too, that also moved about 70 pips in profit. Then we also added another position at the breakdown of the 1.254. I think that was on our 1 hour time frame, where we spotted this 1.254 area. And if you had joined that move too as well, you would have scooped over 50 pips on that one too. So it was quite a profitable start for the GBPUSD pair for us in this community this week, as we were able to scoop over 150 pips with 3 positions running, maximizing the potential of that bearish move. So for those who took advantage of this bearish opportunity, well done to you for being on standby to catch that move. So right now that we are heading into the New York session today, what is going to be our plans as we prepare for the New York session? Well, first of all, I would like to share with you the ideas we saw on the 4 hours time frame, which buttresses the structures we were able to come up with on the 1 hour time frame. And for the sake of those who are not part of the live session yesterday, this is an avenue for you to also be on the same page with us here. So during our live session yesterday, this was what we saw on the 4 hours time frame, where we identified a simple ascending channel to emphasize the level of buying power in this market. So when we connected a series of higher highs and higher lows, we had this bearish trend, this ascending channel figured out. As you can see, price action has consistently respected it. Then we saw our price culminated at the 1.25900 level last week, and we saw that as soon as price action got into this area during the course of last week's trading session, we begin to see sell pressure resume around that area. And one thing we agreed here yesterday is that depending on how price action reacts to this level will determine what our next line of action will be. And as a result of this, we identify that level as our key level for the week, and we set selling pressure below that level will be welcoming selling opportunities, while a breakout of the zone will be welcoming buying opportunities in this market. And as you can see, we saw rejection of that area to the downside, breaking down the trend line we identified to push price to the downside. So at this point in time, the next question we want to be asking here is that this impulsive move that we saw during the New York session yesterday, will this turn out to be a signal that we are going bearish, where the bullish momentum we saw here is likely going to be a retracement of that impulsive move to incite a bearish momentum to the downside into the support line, or even break down the support line of the ascending channel? Or are we going to be having a situation where price will still break out of the 1.259 to incite another wave of bullish momentum to the upside? So in order to identify this, in order to decipher what is going on here, we want to scale back down into the 1 hour time frame to look out for structures that we can use to guide our trading activity today. So scaling down into the 1 hour time frame, this is what we are going to be using to guide our moves. Remember, we had a flat channel where price action was ranging at the beginning of the week between the 1.25850 and the 1.25650 level to give us an indecisive phase before we saw the breakdown of the support line happen here during the early hours of the New York session yesterday. Now, from a technical standpoint, when price action breaks down a key significant level like this, just like what we saw here yesterday, there is always a technical expectation that price action is likely going to come back and retest that zone to incite another wave of bearish momentum. And with the look of things right now, price action is back into that zone that was broken yesterday, and in the last 3 to 4 hours we have been seeing sharp rejection of that zone. If you look at the nature of the wick of that candles, you will see that we have been noticing some sharp rejection around that area, giving us a clue that sellers are still present in this particular zone in this market. So will this turn out to be a trend continuation to the downside, where we are going to be seeing selling pressure to push price to the downside? Well, what we are going to be doing now is to try to see or monitor how price action will be reacting to the 1.25650 level to determine what our next line of action will be. So in that regard, I scaled down into a much more lower time frame, like the 15 minutes time frame, to see how price action has been reacting to that zone, and as well look out for patterns that will support the idea of a bearish momentum. So at this point in time, when I scaled down into the 15 minutes time frame, this was what I was able to see. You can see that there is a whole lot of consolidation phase going around that area, which gives us a clue into the level of indecision in this market. And whenever we see this kind of structures, it's a clear sign that participants in the market are looking forward to a catalyst that will help drive price movement before jumping into any position here. And considering the fact that we are looking forward to a high impact event today, that is the consumer price index, which will be a significant factor in determining if there's going to be a rate hike tomorrow or not, it is quite reasonable that we are seeing this kind of structure around this area. So with this kind of situation here, you know, the next thing we want to do, we want to mark these structures out. So we have a resistant level for the structure situated at around the 1.25770. So let's label this area 1.25770. So let's place this at the top right hand side of our screen, and then we have a support line around this area. So you can see that price action has transitioned into a flat channel around that area. So there are two ways that we are going to be looking out for trading opportunities around this area. You obviously know how we do it. Whenever we have price action caught within a flat channel like this, we want to wait patiently for structures to mature into a signal that will either come in the form of either a breakout of the resistant line had a 1.25770 to give us an opportunity to buy, or the breakdown of the support line here had a 1.25540 level to give us an opportunity to sell. So this is what we shall be looking out for during the New York session today. So let's be on standby to catch any of this opportunity. So to catch this now, I want to be having a buy stop order above the 1.2570 level to capture this bullish momentum to the upside. And if price action drops below the 1.2554, I want to have a sell stop order below this area to capture this move. So it is quite reasonable that we wait for price action to either break out of the resistance line or break down of the support line to be part of any trading opportunity. So let's be on standby to catch any of this opportunity. Let's wait patiently for structures to mature at this point. So these are my views here on the GBPUSD for today. So let's mark these levels out on our chart, and if you want to screenshot my screen so that you can use them as a reference point when you're about to make your independent decision on this instrument. Now, if a breakout of the 1.25770 level happens, you want to be having your stop loss sitting somewhere around this area below the 1.25650, which will be dovetailing to about 15 to 20 pips thereabout. And if price action goes on to further break out of the 1.259, we want to be adding more buy position to our existing trade. But if price action breaks down the 1.25540 level, we want to be adding more position at the breakout of the 1.2540 level to maximize the potential of this bearish move. So let's be on standby to catch any of this opportunity. I hope I made myself clear, and it's on this note I want to call it a day here on the Extra Speed Live session. It has been a wonderful moment with you guys today, and for those who are joining us for the first time, I hope you are able to gain one or two things from what we were able to talk about today. And trust me, the more time you spend with us, the easier it becomes for you to use the information you have gathered here to make an independent decision on your own account. So I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far this week has been doing, and at the same time get ready for the New York session, which is going to be jam-packed with a whole lot of volatility tomorrow because of the interest rate decision coming up tomorrow. And so I wish you best of luck during the New York session today. Please remember, if you still have a position running, kindly move all stop losses to secure your current position as we head towards the major event coming up in about an hour from now. That is the CPI data. And let's also position ourselves in such a way that we can catch any potential opportunities by having the necessary orders placed at the right levels to capture any potential move. So do have a wonderful evening, everyone, and I hope to see you tomorrow as usual. Bye-bye.